Hey everyone, welcome back to Corporate Dakota, the place where we uncover the hidden stories behind the corporate world. And let me tell you, this filing from BlackRock Large Cap Series Funds Incorporated is packed with enough numbers to make your head spin. But don't worry, we're going to decode it all and tell you what it really means for investors out there. If you love getting straight to the heart of financial reports and understanding the real story behind company performance, make sure you subscribe and hit that notification bell so you don't miss out. And hey, join our Discord community linked in the description to keep the conversation going. Alright, let's dive into this semi-annual shareholder report for BlackRock Large Cap Series Funds Incorporated, specifically for the period ending the 30th of November 2025. This is essentially a snapshot of how their funds performed over the last 6 months from the 1st of June 2025, and it gives us a chance to see where their money is and where it was doing its thing. First up, let's talk about cost, because nobody likes paying more than they have to, especially when it comes to their investments for a hypothetical $10,000 investment in the institutional shares class. The cost for these 6 months came out to a very modest $26. That is a tiny 0.48% annualized the investor shares. However, we're a bit pricier at $40 for the same hypothetical invest. Stat. Meant or 0.73% annualized, and if you are looking at the investor C shares, things get even more expensive, costing $81 or 1.48% annualized. For that $10,000 state class K shares came in at a thrifty $24 or 0.43%. And Class R shares were priced at $54 or 0.98%. Annualized, these numbers show a clear difference in fees, depending on the share class, which is typical in the fund world, but it is always good to see it laid out plainly. Now for the big numbers, let's look at the key statistics for the BlackRock Advantage Large Cap Core Fund as of the 30th of November 2025. The net assets were a hefty $3,491,628,988. That's a lot of money in one fund. The fund held 88 portfolio holdings, meaning it was invested in 88 different companies or assets. So the portfolio turnover rate was 57%. This means that over the reporting period, about 57% of the fund's holdings were bought or sold, which gives some indication of how actively managed this fund is. So where did all that money go? Let's break down the sector allocation as of the 30th of November 2025. Information technology was the biggest piece of the pie at 32.8%. Clearly a major focus financials came in. Second at 14.2% consumer discretionary, followed at 12.4% communication services, was at 11.7% healthcare, took up 9.6% industry. ALS made up 9.4% consumer staples, accounted for 4.6% energy, was 2.0% materials, was 1.6% real estate, was a small 0.6% and short. Term securities rounded out the list at 1.0%, other assets less liabilities was just 0.1%. This sector breakdown tells us the fund was heavily weighted towards technology and financials, which are often seen as core growth and value sectors. In terms of the top 10 holdings, Nvidia Corporation and Apple Incorporated were tied for the largest holdings, both making up 7.0% of net assets. Microsoft Corporation followed closely at 6.3%. Amazon.com Incorporated was at 4.4%. Alphabet Incorporated Class A was at 3.2%. Broadcom Incorporated and Meta Platforms Incorporated class are tied at 3.1%. Alphabet Incorporated Class C and VS was at 2.4%. Tesla Incorporated took up 2.0%. And Bank of America Corporation was the 10th largest holding at 1.8%. This list is dominated by major tech companies and financial institutions, which is consistent with the sector allocation we just saw. Moving on to the BlackRock Advantage Large Cap Value Fund Institutional Shares, or MALVEX, for a total of $716,862,208 in net assets. This fund held a much larger 271 portfolio holdings, indicating a more diversified approach compared to the previous fund. Its portfolio turnover rate was 66%, meaning a significant portion of its holdings were trade. Over the period, sector allocation here was quite different. Financials led the pack at 22.5%. Industrials followed at 14.1%. Healthcare was 12.5%. Information technology was 11.3%. Communication services was 8.5%. Consumer discretionary was 8.4%. Consumer staples made up 7.1%. Energy was 5.0%. Metals was 3.5%. Util Itties was 3.1%, real estate was 2.8%, and again, short-term securities were at 1.0%, and other assets less liabilities was 0.2%. This fund showed a different strategy with a stronger emphasis on financials and industrials, reflecting its value focus. Let's look at the largest holdings, which tell a story. JPM Morgan Chase & Company was the top holding at 3.1%. Berkshire Hathaway Incorporated Class B was next at 2.9%. Amazon.com Incorporated was at 2.9%. Alphabet Incorporated Class A was at 2.5%. Walmart Incorporated was at 2.4%. Bank of America Corp Or Asian was at 2.0%, Alphabet Incorporated Class CMVS was at 1.8%, Johnson. And Johnson was at 1.6%, Morgan Stanley was at 1.4%, and Bristol Myers Squibb Company was at 1.4%. This top 10 list shows a strong tilt towards established companies in the financial sector and consumer staples, reflecting a value investing strategy. Now for something a little different, BlackRock Event-Driven Equity Fund Institutional Shares, or BILPEX. This fund had a substantial net asset value of $4,719,712,538. It held 280 portfolio holdings and had a portfolio turnover rate of 50%. This suggests a strategy that isn't afraid to move in and out of positions, but maybe not as aggressively as a pure growth fund. The sector allocation here is particularly interesting because it shows long and short positions. Industrials were the largest sector with 21.3% total, followed by information technology at 18.3%. Healthcare was 15.1%. Investment companies also at 15.1%. Communication services was 8.8%. Consumer staples was 8.3%. Materials was 6.1%. Financials was 3.6%. Consumer discretionary was 1.7%, real estate was 1.3%, energy was 0.3%, and utilities was 0.1%. What stands out is the significant portion in investment companies, often indicating a fund of funds approach or investment in other funds, and the breakdown between long and short positions, offering a more complex risk profile. This report also details derivative financial instruments, which are basically contracts whose values depend on underlying assets like stocks or interest rates. These are used for various reasons, including managing risk or getting exposure to certain markets. Without directly owning assets, it is important to note that these can add leverage and involve significant risks like counterparty default or market movements that are hard to predict, but this section just gives us a heads up on what kind of financial tools are being used. Finally, let's glance at the schedule of investments, which is the core of the report. This is where we see exactly what the funds own and at what value for the Advantage International Fund. For example, we see extensive holdings in Australia, Germany, and Japan, showing a global focus with significant investments in companies like BHP Group Ltd, Macquarie Group Ltd, and Toyota Mot. Or corporation, the cost of these long-term investments for the Advantage International Fund was over $5.5 billion, and their net assets were around $6.5 billion. Looking at these filings from BlackRock Large Cap Series Funds Incorporated, we are seeing a diverse collection of strategies. The Large Cap Core and Value Funds show a preference for established companies with a strong emphasis on financials and industrials, suggesting a focus on stability and potentially undervalued assets. On the other hand, the Event-Driven Equity Fund, D, presents a more complex picture with a significant allocation to investment companies and a notable use of derivatives, hinting at a potentially more opportunistic or risk-managed approach to the sheer scale of net assets across these funds. Particularly the $4.7 billion Event-Driven Equity Fund and the $3.4 billion Large Cap Core Fund indicates BlackRock's substantial pres. Ants in the market, the top holdings in the Large Cap Core Fund, like Nvidia, Apple, and Microsoft, clearly point to a growth-oriented leaning despite the fund's name, suggesting a broader approach. The fact that two of these giants hold the same percentage shows how concentrated the top positions can be. The value funds. Top holdings like JP Morgan Chase and Berkshire Hathaway lean heavily into established financial giants and consumer staples companies, which aligns with the value strategy that seeks out established businesses expected to weather economic storms. However, the higher portfolio turnover in the value fund hints at a more active management style, perhaps seeking out value opportunities that may not last long term. The Event-Driven Equity Fund's sector allocation is really interesting. The significant investment in investment companies at 15.1% can often mean investing in other funds or private equity, which can offer unique opportunities, but also adds another layer of fees and complexity. Its approach to long and short positions suggests the capability to profit in both rising and falling markets, but also carries inherent risks. Now, of course, these reports are just a snapshot in time and market conditions can change rapidly. The most notable risk highlighted across the board is the market risk and the potential for volatility. This is a standard disclosure, but given the current economic climate, it is worth paying attention to. The report also touches on counterparty credit risk, especially with derivative instruments, which is a key consideration for a fund that uses them. A notable point from the notes is the use of master netting agreement. To mitigate this risk, overall, BlackRock's funds are demonstrating diverse strategies with a clear focus on large cap equities. Some funds lean towards growth, others towards value, and the event-driven funds suggest a more nuanced approach to market opportunities. The financials show substantial assets under management across the board, indicating strong in VAV. Store confidence, but as always with investing, past performance is not a guarantee of future results, and understanding the specific strategies and risks of each individual fund is crucial before making any decisions. What is your take on these BlackRock funds? Do you think their value or growth strategies are better positioned right now? Let me know your thoughts in the comments below. If you found this breakdown useful, smash that like button and subscribe for more corporate deep dives, and make sure to check out our Discord community, linked in the description, for more discussions. Thanks for tuning in, and we'll see you in the next one.